kind of dive deep into it. So first, what I want to cover with majority of you guys, and I'm sorry if you understand this already, but there's people that are new and might not know this, is the market structure, right? So the key in understanding what's going on in the market is to know if you're actually in a bullish market or if you're in a bearish market. And how do we know that, right? So you know that by having higher highs, higher lows, lower lows. And here, obviously, you can tell, right? We had the higher high, then we made a new lower low. So obviously, the March 20th of 2020 was very bearish. And you can tell here we were not able to make a higher high compared to the previous high, which was here. So you're still kind of consolidating, right? So the key is when you know you're consolidating is that you connect your lower highs or higher high to lower highs and your lower low to the higher lows. And that's what we did here. This is your higher high, lower low, higher low. Once you're able to connect that, you can play the breaks of these higher highs and lower highs, meaning if you look at the structure here that toss is really bad in terms of, so if I mark these as higher highs right here, and this is my lower high. So if this is my higher high, this is the lower high, I mean, all I have to do is connect these, and now I have a trend, and I know it's consolidating, because we know, all of us probably in here, higher high plus higher low is what? Bullish. Lower high plus lower low equals bearish. So if you have a setup like this of any of these, that tells you the trend that we are in. And usually you want to look at the trend starting on a weekly time frame and then kind of look at it on daily, 4 hours, 1 hour. And I go down to 30 minutes and even 15 minutes for the channels to see what's going on. So now that you know this, we know the point of entry is just naked trading. We know that this was a previous lower high, right? So we know that 104 on Nike right here was a good entry, right? And you can tell that you could have waited for 104, or you had a risk a little bit more at 105.59, which was pre-COVID highs, as we call it. So for me, it doesn't make sense to risk this much here, this little portion right there. You guys see that perfect circle? To risk it for the entry of the trend line, I'd rather wait for me to make a new higher high. And most likely what happened if I was to go on like a maybe on this type of time frame is that it came back to a retest of that lower of a higher high. And you see it here. It broke and it came back even to the trend line and retested. So all you would have to do is patiently sit and wait for this to happen and then take it higher. So far, so good?
Yes, sir.
And then you just keep kind of going, right? And here's your higher high. So I'm just setting the market structure so you guys see it, right? And here comes your higher low. So this was your another higher low right here. Your higher high. I just want people to see what happens here. And now you guys see here that you're making lower highs. You're starting to make lower highs, but you're also making lower lows. You see that? And then here you're making, I guess, still lower highs. That wick. And these are micro trends, guys. What I'm marking here is micro. This would be a major, right? This is a major trend. And these right here are micros, right? So this would be still here. This would be a higher high compared to here. This would still be in a micro trend. It's lower highs, but here, this is still a higher low. You guys see that or no? This is still a higher low compared to the macro trend here. Between this one and this one, this is still a higher trend. Does that make sense? And then
yes,
we have
sir.
And here you're still, now you're making higher lows. And here's another higher low. And what should we do here? When this happens, what do we do? Well, it's fairly simple, right? I mean, you do this, and I'm just doing this roughly, right? And I'm not trying to be perfect in this class. So here, we connected these. It almost looked like a descending triangle, but also looked like a bull flag, right? You see the pole right here, and you see the flag being created here. It's almost like it's waving at you, right? So now we know the measurement between, if you measure between here to here, what is this, 61%? And if you measure between here and here, it should be close to 61%. So it didn't really complete this perfectly. So it should have gone to about here somewhere to complete it. It's about 198. And not to say that it won't. I mean, I don't even know what ticker I picked. Nike. It looks like, attempted and it went all the way to 180. It still had about 20 bucks to go, and it never got there. But then it broke out and it made new higher highs here, and then another higher high. And what would be your entry point here? And this is your higher low. What is your entry here for shorting? Where would you short this?
Neckline.
Yeah, you have the neckline, which was here, right? Then you also had a higher low here, which was taken out by this one. So this one here is the most important one that you have right here. This is a very important one for you to short. You could have shorted right here as well, right? And you also had a gap fill below. So 156 breaks, it was an easy short. I believe this stock had a huge gap on one of the days. Yep. So there's the huge gap we had from the earnings that it just filled completely. It tried here, bounced, and then you guys see that it completed that gap fill all the way here. So now there's a high chance that we're going to go here to the next level support, which would be 126. For common shares, I'll probably buy some shares at this level and treat it all the way to 105 as a dip buy. But does everybody understand the market structure so far? Okay, I'm assuming yes. So here, another flag you had. So just to give you an idea, because a lot of people, only look at the flag and they're like, oh man, it's gonna break, gonna go higher. Well, there's flags that they just don't break to the upside, right? So if you look at this flag, for instance, this is a beautiful bull flag, and you see how dangerous this level was here. You had a kind of, gap starting right here. They gapped down all the way to it. They set up a trap. This is a beautiful trap here. You see the trap that they set up for you right here, and they went up, pushed it up a little bit here, and then basically just continued down. So this is just naked price action charting, just to understand the market, right? Understand the structure. And this happens on every time frame. I mean, if you're looking here, I mean, you can do the same exercise, right? You can do the same thing here. You made a, higher high here, and then the next day it beat the highest of the previous day here, which we mark as PDH, previous day high. And you see that it went here. As soon as it, there's a couple of strategies that you can use. As soon as it closes below this, dips below it, you can try shorting and put the high of the day as your stop loss. That's another strategy you can use, or a tactic when trading. Also, you had the lower highs here, lower lows and higher lows being connected. And look at this. It came here, retested, and then it continued down every time. So just understanding the market structure will help you tremendously in terms of trading and make you a better trader. If you look at any stock, I won't look at any of the major ones we trade because I have already spent some levels, as you see here, charting these, and I don't feel like redoing all of them. So let's see, I don't think I charted CRM in a while. So same concept here. If you go on, let's say on 1 hour, which is one of my favorite to look at the market structure for intraday stuff, right? Because you can find a lot of channels on 1 hour. So if you look at, for instance, right here, there was a nice channel here. If I kind of auto zoom this, you'll see that it was probably the best one. Let's see. And what you can do is not to cheat. Like I just tried to draw a channel. There's these two lines. You pick that guy up and you do this, and then you can do like something like this. And you see now you have a nice channel. The break of this channel and the previous lower high here was your entry. You see that how well that lined up? So this here was a perfect entry to go long. And what do you think happens to the breakouts of the channels? Anyone? Make sense now?
Yes, sir.
We're usually going to retest the breakout of the channel. And how do you know this stuff? Well, here, let's just grab this guy right here. And here you go. Pretty nice, right? They broke the channel, came back, this buyer, whoever filled the order, somebody was like left hanging. So they're like, hey, bring the price back here. We're not going to buy it till it comes back here. And now they bought it. If you're to add volume on the bottom, you'd see probably a big green on this red candle here. Is everybody understanding this? I don't know how many people. It's not, don't be afraid to say no. Like, it's okay if you say, ask me questions and make sure you understand the structure. Meek, does it make sense? I'm gonna pick on you. Every people here that I see that are new.
Meek.
Meek's on mute. Doesn't want to talk to us. Tag, does it make sense?
Bueller.
Okay, you guys are asleep. Do I need to hold a class, or you guys need an hour to wake up? Come on. A little bit more interaction in the classes. That helps.
If you guys don't want to use your mic and talk, just type in the chat.
Yep. Unmute it. Let's see. No, you're not. You can unmute yourself, but you're not server muted. Okay. So I'm seeing a lot of yeses that it's making sense, so that's good. It's very important that you understand the market structure before we go into the next step, which would be the orbs, and understanding next piece is understanding the VPOCs and demands. Okay. So with that being said, let's just add orbs. So let me make sure I disabled some of these. Does everybody know how to enable the show studies to be here quickly, so you don't have to wait for 2 days and go through settings and blah, blah. So if you go to click on the little wrench here on show studies, click this little guy here. It'll basically pop up here, and you can, just one button, remove all the studies like I did here. So hopefully you guys know that, but if you didn't, I'll go ahead and enable this. So orbs, right? Honestly, if you stick to orbs and you don't have bias towards any of it, and understand a little bit of a candlestick, lower highs, the market structure, and you keep your discipline where you take your profits between the targets and hitting each target, I don't see a reason why you should be negative. If you guys look at Earth, I met Earth on Twitter maybe a year ago, and he asked me, how do I trade? What do I use? And I explained to him the orbs. He actually bought the orbs from me on TOS. And I mean, obviously, you guys see how he trades. He puts in 10 contracts, gets $100 each, and he's done. He does it 5 times a day. That's $5,000 a day. You don't need to complicate it. There's not much more to it. There's no other indicators that can help you more. All we're looking is at price action here and understanding between the VWAP and the key levels for intraday where we can take profits and scale out. Get in, scale out. Get in, scale out. So with the orbs, if you're not familiar what the orbs are, because a lot of people are like freaking out when they hear the acronym, is basically opening range. Meaning within the first 30 minutes, there's so much news, information being traded between the brokers and the markets, and obviously lately with the world, right, with the wars and whatnot's going on. All of that information prior to the computers and all these systems had to be digested by humans, and humans would react to it on the trading floor. So if you look at any videos on YouTube or anywhere, or read any books, the trading floor sentiment was basically a telling sign on how the market's going to do that day. Obviously, we don't have as many trading people on the floor anymore as we used to, right? Having slips and whatnot, waving in the air, freaking out, crying or whatnot before. So now you have to use the sentiment of the computers in the first 30 minutes to figure out what the sentiment is for the market. So if you look at, for instance, here, your first 30 minutes is basically right here. They start from the open, and then you see the 1010 is, where is it? Like right here, I guess, including that candle. This is your first 30 minutes right here. So the range was set, this opening range high, which is this one right here, and opening range low. If you look within the first 30 minutes, the high was here and the low was here. So far, so good, everybody? Okay. So far, simple. You have this and you have this. This is the range that we are looking for. Within the first 30 minutes, the range was between 206 and 202.83. Okay. And one thing that we do this in our Discord, we have to identify quickly what type of day it is. Does anyone know what type of day this was? Catching rockets, what type of day is it?
That's a trending day.
Trending day, correct. So you went down, you gapped up a little bit, and then you just kept trending down, and then you bounced here, and you really never took out even orb low. On trending days, you will never take out the previous orb high or the orb low. So here, you basically never did that. You really, you attempted here, and boom, you came back down on CRM. So there's definitely a trending day. Now, how do we take the entries, right? Well, we got this. What I do, I use 3 minutes, and I use ASHI candles, I would say 95% of the time when I trade. And the difference between ASHIs and the regular candles is that ASHIs consider the close of the previous candle to calculate the next candle. The regular candles do not do that. So therefore, it's a little bit more, in terms of trend and how it's working, it's a little bit more accurate than a regular candle, especially for newer guys, okay? So let me add this guy. Now we have 3 things, right, that we are looking for. We are looking on this screen which 3 confluence points are telling us to go long or to go short. So let's look at it, right? And I know a lot of people, in hindsight, oh yeah, that's easy. Now, well, a lot of us trade orbs with no hindsight, and we're profitable day over day. And some of us have been profitable for a couple of weeks now, just doing the same thing over and over. So here, I suggest you don't trade the first 30 minutes. Yes, do I trade the first 30 minutes? Yes, but I've been doing this for a lot longer than most of you guys, and I see maybe now what some other people don't see, and I trust myself on some of the entries and exits. So would I have bought this in the morning here, before the orb low at 954? Probably yes, I would have bought this. And there's a couple of reasons I would have bought it. There was a consolidation here pre-market. That's where it broke out from. So those are the things that I look at. So if you look at here, this was a little box that it consolidated from. Now it's coming back for a retest. So for me, there's things that I look at, and with time, you will also get it, and you will not have to wait till 10 o'clock. But for now, to make your account grow and compound 20% at a day or 10% a day, or even 5, whatever that percent is, you want to wait 30 minutes. So you don't get, kind of, especially in the 1K challenge, once we start, let me see, my funds should clear maybe tomorrow or Tuesday. So we can definitely start it. Is using the orbs only for the entries. So let's look at this, right? So 10 o'clock comes around right here. We see that we are rejecting the orb 50. And orb 50 is nothing but, what is the orb 50? Anyone knows? How is orb 50 calculated?
Division.
Say what?
High
Sequence, catching rockets, you're not allowed.
Oof.
Somebody else. What is orb 50? I told you I'm going to decipher this orbs for you guys in this class, so hopefully you guys are listening. Orb 50 is the middle between the orb high and the orb low. It's basically a Fibonacci 50% between this move here. So what we did with the fibs is we grabbed this to this, and this here is our 50% of that move. If I was to chart 61.8 would be here, and 61.8 would be here. So if I was to add fibs, let's say here. Okay, I was wrong a little bit. Okay, I missed it by a little bit. So, but here's your 61.8% too. Some people like to use it. I don't like to use it on intraday level because a lot of retail traders look at the 50% for the Elliott waves. So that's how I also use it as well. So here, now we're getting into the trade. So it's 10 o'clock and you're seeing the wicks on 3 minutes on Ashies. When you see some of these wicks here, what does it mean when you have a top wick like this? Anyone?
Selling's happening.
There's a selling pressure, right? And some of you guys got this from the last time, and I'm not promoting it. I'm just telling you how all the weapons that we have in the Discord. You see these arrows here that showed up even on this candle here. People will use those as points. This was your one confluence point. The second confluence point is that you're unable to break the 50%, and you're also below the VWAP. And you guys see this little red line here? What do we call it?
Trend bar.
The trend bar. Trend bar is your friend. If you don't trust the trend bar, you're not ready for trading just yet. If you talk to any guys that are profitable day over day, Earth, trading mindset, and all these guys that actually picked up and are trusting the knowledge, trend bar is the only thing that they trust with their life, along with the VWAP. The trend bar will keep you in a trade long. Look at this. Trend bar turned red here. You had an arrow here. You had the VWAP and the Orb 50. Don't mind the 9 EMA. I added this just to help you guys with some day strategies if you did not see some stuff clearly. And then you have 1, 2, 3, 4 confluence points in this area right here. Between here and here, you guys see how many points we got? 1, Orb 50, VWAP, trend bar. 4 of these. So honestly, there's no reason not to take a short at the Orb 50 rejection right here at 204, and you're driving this all the way down to 202.85. Most of you guys traded options before. A $2 move on a 0 DTE will net you probably 100 to 200%. And that's just one target here. What if you drove it, if you bought 10 contracts from 204 all the way to 199? Let me see if I can get these contracts to show up on CRM. Yeah, we can definitely get them to show up. I'll just show you. So people, most of you guys are hungry for actually like seeing the contracts move 200-300%, but actually forget to realize that these 0 DTEs or even weeklies would have moved a lot more if you just played them between the orbs. What was the last week's expiration?
4th.
4th. Sorry, I had an error. And you can hack this here. You see this, bring the contract.
Shorty doing some hacker stuff.
Yeah. You can hack this guy, and then you paste this in here. And just let's look at his contract price. If you would have gotten in on the rejection at 10.03, let's just see what it looks like. I would have gotten in at 10.03, and here's the contract. 10.03 was 54 cents. You guys agree? Let's say you got the worst fill that you possibly could on that candle, and you got it at 64 cents. That contract went to 175. I'm pretty sure that's 200%. Right? And that's just that move. Even if you went to the first move, it would have been 100%. You guys see that? From here, if you got in at 64, all the way, so you had 83, which would be a nice, 40%, almost 30%, let's call it 30%. Here, you take some off, take some off, take some off, take some off, and as you're moving up, you're moving your trailing stop to be to these levels. So if it breaks down, that way you're not red in the, on your contract. You move it up, you have 2 left, you move it up. If it starts dipping, you put the trailing stop here, Once you're here, moves here, you move your trailing stop to the next level or just move it up if it's 0 DTE, very close so you minimize your loss on a positive trade. Does that make sense with the stop loss and trailing?
Absolutely.
Okay. So, and this happens on literally every stock. So let's look at SQQ, which I kind of like trading lately. Same concepts here, right? So here's, you have 1003 again that came in, and you guys know the retest of, Orb 50s and Orb lows are great risk to reward trades every time. And this is where we got some SQQ. Where I mentioned to you guys in chat that I'm getting SQQ here. And you just keep driving this. I mean, same concept. So let's look at it a little bit closer on this level here. So here comes 10 o'clock. You have a nice indecision candle here being built. If you look at the pre-market high and you look at the last high of that, it's telling you here that this was a good resistance. Even this level here was a good resistance previously, right, from the pre-market data. You know the pre-market high was right here. So if you know this was a good resistance, so that's not a bad entry as well if you wanted to wait. But you see what they did? They went up, they trapped some people, and then they came back right to it, to the consolidation point of this whole zone here. So this right here was a nice area for consolidating. If you look at this right here is a nice consolidation from pre-market, and look what they do. They come back here, and then they brought it back all the way to the top of the zone. They faded people out all the way to the Orb 50. Here you got a green arrow, big green arrow, big green red, and it's basically telling you, go long. If this comes up, and you trust the systematic type of trading, this is telling you that systematically that this should go up with no emotions. It should go up, and you can put your stop loss, whether it's here on 0 DTE or if you're playing on Friday next week's. Put 4305, which was your consolidation level, multiple times that it hit, and put it slightly below so you don't get, put like 4295. Just think about psychology for a second. So they don't play you with the stop loss. Put it right here, and if it breaks, then you're out. But the only thing that you can manage is your risk, and basically you don't control price. You don't control how much money you're going to make. The only thing you control is how much money you're going to lose. So you should not really focus on how much you're going to make. You should worry how much you're going to lose, the least amount you're going to lose when you enter a trade. Okay. So here you have multiple entries, like let's say the Orb 50 here. You have the VWAP, you have the trend bar, and it's holding the Orb 50. For me, that's pretty good, right? You have 3 Confluence points. You had an arrow on the bottom here that came, if you want to count that one, sure. I'll look for a minimum of 3, and the 3 went all the way up. Yeah. And my stop loss would have been somewhere around here. Just knowing the previous market consolidation happened and they respected that level, I would have dropped it right here below and rode it all the way up.
Yeah, volume as well as a confluence point.
I'm sorry?
You have volume as well as a confluence point.
Volume, like on the bottom?
Yeah.
Yeah, that's true. So the volume is dropping, the green's buying. But in terms of orbs, yeah, this is what I look at: the VWAP, the trend bar, the orbs itself, and then I'll look at the pre-market data to know where's my stop losses for intraday, or if the fib is orbs are around like these Fibonacci levels, I will use that as a stop loss and put it slightly below so that way they don't stop me out on purpose. And if you look at the 3-minute trend bar, let's say you got in here. Did the trend bar ever turn red as it was going up?
Nope.
It was basically telling you here, this is a good spot to get out. And when you look at the targets, intraday targets, you see the 1618. What's the target here? 45. What did it hit? It hit 45 on a dot, and then it basically created this giant consolidation now that you see here, intraday, right? So if you look at it here, connect these highs, connect this, and look at this. So it made a high, then lower highs, higher lows, so potentially indicating maybe we continue on Monday, tomorrow. Does everybody understand the confluence points? If you don't, ask questions. I need you to understand them.
Yes, sir.
Yes, these errors are part of my Orbs script package that I offered to some people the other day, I believe. Okay.
And it also shows up in the trading view one as well. So
Yep, that's correct. If you guys don't think I tried many strategies in my life, I'll just scroll really quickly through the list. Here's all of the strategies that I worked before. So if you need some strategy coaching or whatever, I can help you with your own strategies as well. And a lot of times you guys will hear people, oh, I saw a full send on something and I shorted it or I went long. So what they are referring to is the full send that we call FS here. On SQQ, pre-market level was obviously we had a POC there, which is the next topic that I want to talk about, and then combining with some of the other things to kind of give you a clarity on how we use the orbs, you know, the full send and also the VPOCs and POCs to help us identify the levels, right, and make successful trades. So if you look at here, I just added the full send so you guys can see it. Full send showed up here at the level of 42, I guess almost perfectly off of the POC, which gives you a lot of confluence that it's going to go higher, right? So if I was to do something that, you know, maybe some of you guys don't know I do, I will take the pre-market high, I'll take the pre-market low, and then I'll just kind of fib it out and see what are the levels that we had. So the first level of target was 45.41. So that tells me that it didn't continue as it should have in terms of the strength for the day. I would have expected it to go between these levels, 45 and 46.39. As you guys know, I only care about these fibs. Some of you guys might care about more, which is okay. I use 50, 60.18, 1272, 1618, and you can add 227 and 2618. I just don't like too much stuff on my chart, so that's the only ones that I care about. Okay. Is everybody comfortable on Orbs and Confluence Points?
Yes, sir. Yes, sir.
Okay, so do you manage your contract on 1 minute chart after you're in? So the contract, if you're charting contracts, right? So the same way you're managing the contract is using the orbs. Here you have, let's say you got in, as we said, I think it was 10:03 on this one somewhere. Let me switch to 3 minutes. So, okay, sure. Let's say we got in, let's switch to 2 minutes, that's fine. Okay, we got in here, which was 64 cents. If I bought 10 pack, I will sell probably 6 here or 8 here for if it's 0 DTE and kind of keep going here. I probably would have sold out all of them if I saw them coming back. And then if it re-breaks the orb high, you can get back in at 83 and then sell more at 99 cents, right? And if you have more, sell here and then just keep moving your stop loss. Not necessarily do I look at the contracts when I'm in. I look at contracts usually on same time frames as I look at the candles, which is 3 minutes, 5 minutes. So if I looked at it on 15 minutes here, same concept, right? I would look at it as I'm looking at any chart. I don't change to 1 minute much on any of it. Let me see this. This one was interesting to play. I played this one actually on. Is there a dot somewhere? There's a dot. Okay. All right, here it goes. Yeah. So this one was a fun one to play here. This is where I grabbed a lot of them here, about 70 something cents here. I grabbed them and they went all the way up to about 420. And I mean, in a matter of seconds here, they loaded up and look, it hit about 420. And I played it the same way on Tesla that day on Friday. So this was here. We had the Orb 50 break. As soon as this kind of started happening, I started buying some contracts. And look, it went all the way to the 130, which is why I was playing the 130s, which was the 127 target. So I scaled some out here, scaled some out here, and it was a good day. Simple concept. All right, now that we're all comfortable with this, we'll go into fun side, understanding the supply and demand. So there's, as we talked about before, for new guys, there's multiple ways you can draw supply and demand, right? I mean, you can use candlesticks, right? If you see a zone of consolidation, right, you can use that. You can use single candles as consolidation, right? So if you're looking at, for instance, here, this is the one that I would have been after. It's this candle right here that I would have been after for a retest. I'm looking for indecision candles on both sides that grab majority of the range that it was in. And you see here, it came back, retested, and kind of exploded from that level. So you can use single candles like you see here. There's another one here. And look, it popped there, came back, and then went all the way higher. And then it went from 90 to about 105, which is a good level, right? I mean, to make money on this, it's great. So in order to simplify this, I've been using POCs and VPOCs to help me with drawing these. And they become, I think, the room's favorite, and they're really, really accurate. And what we'll do here is that we're just going to actually, we're going to remove the candles altogether so you guys can see how this works. So I'll remove these. See. TOS does not make this easy at all. Okay. All right. Can somebody tell me where we're going to reject? Anyone? Yes, I do always have extended data on. Can anyone tell me where we're going to reject right now, or where we're going to find support?
I mean, I would
no, we don't have bias. We have no idea. We don't have anything to go off. We have the high and low just because of the settings that shows here somewhere. We'll remove them. Okay, so no clue what we're going to do here.
Nope.
The first step you want to do is we can add the show study here. And we'll add, why is the thing not showing up? That's weird. I've never had this happen. Show studies unchecked. Okay, here we go. Okay, so the first thing we do is we look at the 30 days, 30 minutes. So you want to make sure on your time frames, if you're new to ThinkOrSwim, that if you don't have it, you basically click on the time here and you click on customize list. If you don't have it, you can click add time frame. You can come here, you can change this to 30 days, and then change this to 30 minutes. Click that, click add, save. I already have it, so no purpose in adding. Or if you have already 30 minutes, just click edit and change the date so you guys have the 30 days in it. Okay. Obviously, I have 0 candles here. I don't have a single candle to know where the price is, right? So the best thing you can do, I will stay on this guy, is this. We know this is a POC. I guess this is from Thursday here. So let's see. We're going to mark this as a POC for now. Okay. We don't know if this is a VPOC. So for now, it'll be POC. And on the bottom here, sometimes it works. You have a date here, which is 2/24. So what I do, I put the date of that POC so I can reference it and kind of look at it. Then the next step that I do is I'll look at the volume profile of that POC. So in this case, I see a nice, even distribution, if I want to call it a standard deviation, on the volume profile that kind of goes from here, and you guys see that it has a little wall there. So I'll usually mark this. I'll click on edit properties. I found a new trick where you change this date to 2023, and now this box is extended all the way down forever. I don't have to worry about it extending the box constantly here. So this is our first level that, I'm expecting something to happen there. There's a level here, and sometimes the whole area of a volume profile, if you guys are not familiar with the volume profiles, this section here that you guys see for each day is 1 day of volume profile. So what this tells me is where was the price and where was the highest volume traded. So this yellow line that you guys see that is drawn here is telling me that most of the volume on this day happened at 102.89. So that's your point of control, POC. What we call VPOC is a level. Let's draw this one. If I get the drawing tool correctly. This level here is a POC, but it could be potentially a VPOC here. If the level was not tested back up, like if the price and candles did not come back to it, or if the price didn't come back down to it, it's called a VPOC. So if this price here, which I know this is a VPOC just because I've traded RTX religiously for the past couple of days, I can tell that this is potentially VPOC here, just knowing the ticker, right? And you will get familiar with a few tickers and you'll know them inside out. And then the same concept happens here. I look at this, and then another trick you can do is you can duplicate this drawing, and you can actually come here. And the only problem you might have is figuring out the, okay. And now this one is automatically extended to the next year. And here's your POC. This would be your potentially supply zone. I don't know where, yes, RTX is below it. So this would be a supply zone here. So let's just keep going. You mark this POC here. You have a POC here. And one thing to notice is in terms of the boxes that are kind of going down, like these high value areas. The top of this is called high value area, high value node, and this is a low value area here on the bottom of the box of a one single box. High value area, low value area. Okay, so you can tell that the areas are dropping down all the way, like they're becoming lower lows, lower highs on all of the boxes. They're just kind of dipping, and now you had a big overlap here between it. Now you have a tiny overlap. So let's see if the next box comes back. If they drop it, there could be news that the war is gonna stabilize. They're gonna take off. Then you would look for this drop here, all the way to the 91.89, and I'll show you in a second how that works. So far, so good on these boxes. And then you would do a similar thing here on some of the POCs. When I see it that it's congested, I really don't draw too many boxes just so it doesn't look cluttered. If I look at this one, sure, I'll draw that one. This one has a nice little area here. And you can color code these. And you guys see this one, I would not mark this one because it'd be too much. Then here you have this guy. That's almost like right here. And there you go. And then you would just kind of change these, right? So you see the POC here. What is this? POC 228. POC here is, let's see, 32. This POC here is, and you guys might think this is tedious and it looks boring. You'll see once the levels start hitting how boring it is. Okay, and then this one here is the last one. Let's see, what is this? 225. Okay, let's say this was enough and we wanted to see how the price reacted to these. So now these little areas become your supply and demand zones. So far, so good. I have still no idea, how the candles work between these, but this is what I have so far in terms of price and demand. And if you look here, right, there could be some levels that you want to pay attention to, like this one here is fairly important level right here. And you have, you know, two value areas. So I'm just going to grab the area of that one, the high value area and the low value area, and I'm going to mark it appropriately. So POC 29. And then here you guys see that there's a lot of congestion here, right? There's probably it was accumulating because it popped right after that. So somebody, you know, since I guess this date, they knew something's happening here. Okay, so let's just kind of go back, add the candles. We'll do reset to default. And then let's just look at like 30-minute candles, or and we'll switch this to Ashi's for a moment. Okay, so let's kind of look at it right now. So you had a zone here at 102.98, and you can tell once it broke this zone that it went to the next zone, which was 101.62. And just remember, I had no idea where these candles were. I could not have any bias where the price is. So if I was to, let's say, extend this line a little bit, just so you guys see it. So I'll extend this line all the way. Here's nice support, came back, rejected that POC at 101, came back all the way to the POC here, 3.4. So what does it make this POC here?
Virgin.
Anyone? Yeah, this is a virgin POC. It was never tapped. So what we do is we just add the little V in front of it. Now this is a virgin POC. If you look at this one, so let me just kind of give you a whole view now. With this price here was also never tested here. So this also becomes, oh, I'm sorry, that is the VPOC. I was talking about this one here. So where is this one coming? This one is POC here because it's from 2.9. This one here is becoming, did I have it wrong, charted? How did I get this POC from here? That's weird. Okay, sorry, I think I messed up somewhere when I was drawing. So this here would have been your, I guess, POC, not really, go here, this is your POC for 224. I don't know where I got this one, I'm sorry. I thought I saw a yellow line. No, there's really nothing there. Okay. So do you guys see, well, for instance, RTX, right? It's been running on the news of the war, so it has left some price action to be filled to the bottom side. So 97.98, 97.66. You would expect what to happen here? Once it comes back to this price, what would you expect it to happen? Anyone?
They're going to see a bounce.
We may get a pop.
They'll most likely get a pop. So if you look here, we have a nice channel. And the bottom of that channel here, let's say we open up, it would be around that area that we are getting that pop there. Then below that, we have 95, 93. So if it breaks this 97 level, there's a high probability we're going to the 95, 93. You break that level, you're going to the next level down. And that's basically how it works for every stock. UPSC has nice movement lately. I guess I charted this one. So for instance, this was a VPOC here. I just want to give you an illustration on something that's been running. You guys see how this was a VPOC here and the stock ran away from it, and then it came back to the POC, and you guys see what I marked right here. When there's multiple POCs together clustered, I usually add number of POCs that were clustered there together. And if I look here, let's see. Do you guys see the POCs here? Let me add a little bit more. Why is this not picking up more data? Change it for a second. There we go. So we'll look at this. So if you look at this POC here, you guys see 1, 2, 3, 4 POCs in this area. I marked that as a 4x POC, and there'll be a strong support coming back in the future. Most likely it will be a magnet when it starts moving. Okay, so look what happened on this stock. I'm just going to hide it and kind of show you guys. So we had the VPOC here, and the price went all the way to what, 158. And look, if you trusted the VPOCs, and let's say you buy here, you buy there, you buy longer contracts, you don't buy day contracts when something like this happens, because it took 1, 2, 3, 4, 5, 6 days to come back down to the VPOC. It'll probably take the same number of days to get back up. So 1, 2, 3, 4, so about maybe 3, 4 days to come back, double top, then run all the way down. Does it make sense why VPOCs are so important right now after you see this? Hopefully it does, because you guys are a quiet bunch. Okay,
Like
so
you
next,
said, if you are just,
go ahead.
I was saying, if you just are patient and wait, like you've been teaching, you can just pop that easily.
Yeah, you just literally buy the contracts right there, and I'm pretty sure you'll end up being positive. So here we have another VPOC, right? So you guys see that once this price left from here, so if you look at VPOCs and let's look at this 224, so a lot of VPOCs on this date. So if you look at this VPOC at 117, you had a little bit of action here as well, about 121. So you have some area there for support. So this would be a POC. So this is POC 220, right? And then if you mark them all, you have nice levels and targets for your trading. And then here's a level here, which I guess the stock did not really like. POC 33. And then here you have a major one here that it didn't like. POC 228. And then you see a couple of them here. So if you're basically drawing a demand zone here, it would most likely be something like this. Like this. I was trying to grab the volume of this one, and you get this area right here. Okay, so if we remove this, what I would expect to happen, for instance, on this stock, if I was going to trade it, if I just zoom out on the daily, I have a nice trend line here that, respected before, and now we have a VPOC that's coming up on these levels here. So we bounced before at 126 level, and we have, I guess, didn't do a good job naming them. That's this. So I guess this level here is more important now. It should be the POC 434. We'll delete this guy below. Okay, so if I hide this for a second, then I kind of see, hey, what can happen here, right? So if I'm looking at this, most logical spot for me to buy would be around between 120 and 117 area. Because I see that we have a POC. If I see that we are kind of creating support right here on this POC and you have the psychological 120 number, then I'd be like, okay, well, maybe we're going to bounce here. And I don't mind entering here, and I can re-add on the VPOC. Does that make sense? And most likely, I would not be looking to go on a 0 DTs on something like this, considering that I know that it took about 5 days or 6 days let's say, to get to the top, to the next levels of POCs where we want to sell. So for me, it doesn't make sense for me to kind of push it into 0 DTE and then it loses, and then in 2 days it pops and you're already out and you lost the stop loss hit. So on something like this where it's a nice range and you count the number of days that it took before, you would look maybe, March 18 contracts on this and grab, like, I would even say 135s if I was trading here. So if I go to UPST, I look at March 18th. So these are fairly expensive, about $900. If you want to grab the 150s, they're about $460. So decent volume, open interest on them. So you would go here and I would just literally buy them. Or if I'm playing not the full move, right? If you're playing just the bounce for a couple of dollars, meaning from 117, it could go to 120 or 127, then you can play the weekly contracts right here. And you can play, let's say, I don't know, and you see the price you're going to be paying. For instance, on this has a high IV of 145. You're going to be paying a hefty premium on these contracts. So maybe not the best example in terms of contracts, but I would probably buy, like, where do we close? At 128. If it goes to 117, I'd probably look at the 125s once it dips and the value is coming down to it. And then you'd be playing with the market makers. Now you're on the market maker side and you're buying at the critical levels instead of buying the FOMO. For people that were buying, let's say here, they're like, oh my God, we're going to 158. Well, no, they need to load up. The market makers want to load up if they're buying this for long hold or institutions. They're buying it. They want it cheaper. They're not willing to pay 150 when they know they can drive it to 117. I mean, if you put in $10 million at 150 or 120, it's a big difference of what you're getting for what you're, how much money you're giving. So that's why the patience and knowing where these levels come in works great. So I think, what was it? What did we trade? So let's look at NQ for a second. Here's NQ. So here's our VPOCs here that we had. They bounced. We had a lot of levels that, and I think we even identified some of these scenarios. I think one of them hit, if I was to go back and figure it out. I think one of the scenarios hit. So we said short below, that it's going to go here, and then I think it went, let me move this so I can read it. 1387.4 to 1378. Yep. So we said it's going to go here below, and it hit perfectly to this level of the demand zone. So then the next thing, what I do every day is when I see these levels, right, I will delete some of the intraday levels, like right here where it says double top intraday. I will remove that. Shorting below here, I will remove that. What is this level? I'll remove it first. Well, I won't remove that one. I'll just extend this, and this is just what I'm continuing to do to add on to my chart as the new levels and new days pass by. So here we will move some of the stuff. So this POC is important. Let me see how it kind of looks right now. So we have this area. We don't need that anymore. So this was our buy area here to go long. The red one is your strong supply, which was to go short. So now what I would do is I would look to see where this POC is. It's sitting right at the bottom of the demand at 13,780. So if you look at this level becomes fairly important for it. And I would say this is POC 33. And you can literally remove this area here, right, to kind of consolidate it, to make it cleaner. And just zoom in on this volume profile a little bit. So it's probably somewhere around here that I would. So this area here becomes your kind of demand zone here. Okay, so if it misses this target here, I think we have a POC from somewhere way back here, or we had a demand zone drawn from the, you guys see this, what I did here? So when there's no POCs in between, like right here, to get a 1380 to 13.1 drop, you would need something, not that it can't happen. You see here, we did it. You would need something, news-wise to happen where it's like, okay, well, it looks like we're going to drop. like whether it's war or nuclear weapons lately, the talk, something really really important. But what I did here is I was looking at this volume profile, and this volume profile had a mini POC here, what I call, and then it looks like later of the day, when you're looking here or early in the day, they actually loaded up and most of the volume happened here. Meaning the POC was probably at one point here, they shifted it down as it dropped, and they accumulated here, and from there it kind of popped a lot, okay? And you had a skinny belly here, meaning that there's no volume nodes in between. As if you're looking here, you see this area right here, there's no volume nodes, so that's why the price flew all the way up through it, because there's really no resistance to it. But this area here was fairly important because it did create a shelf, like a major shelf. Let me see if I can make it more cleaner for you guys so you can see it. See if this helps. Yep. So you see now the shelf right here, how it's created. It looks like a pretty nice shelf that it might find some support there in the future. So if we go here and I look at that level, that's the target right here. And the POC, if I was to mark it, it would probably be somewhere around here that I'd be looking, which kind of lines up with the 13, I would say maybe call it 5. If I wanted to move that to this level, which would be kind of psychological level too. So it's a little bit more of art than science when you're charting. There's no absolutes when you're doing it. So if I look here, I'll probably put it to be somewhere around here, the POC, just because I know that psychological 13.5 will come. So if we are able to break below the supply zone or demand zone, I'm sorry, at 13.741, I'm pretty certain that we would visit this 13.5 here. We will stay in this zone below till we hit this 13.15. And this level will be hit most likely, guys. Just as this level here, you guys see that this level here was a VPOC. I went all the way down from it. And look, we finally came back, I guess, on Thursday, and we hit this level, and then we didn't like it. And we went down. We went down a lot, right? We almost went down, what is this, like 500 points from there. So same concept. This was a VPOC here. Let's see, 216 VPOC, sorry. This was a 216 VPOC. It came back, rejected it, and then you see now that we have this POC here. We have this demand zone that's created, and if I was to kind of extend this, let's just kind of move it. So you see here that this kind of demand zone here, if I retro back, you can see that it's kind of working at this level. So I would watch for a short below this level, about 13.74. I was shorted below, and I was pretty sure that you could get 200 points on NQ shorting that, which means if you have Qs, you can find these POC levels, and it can basically pop down. So we talked about this, I think, in the last class, if anyone recalls, about the 5 days consolidation on these. So if you look at this, every time it has 1, 2, 3, 4, 5 days consolidation on Qs, usually popped 1, 2, 3, 4, 5. It popped 1, 2, 3, 4, 5. It popped down. So that's what we were showing in this picture. I know it's a little too much now. We have to do these one by one and ThinkOrSwim. So now if I'm looking at this chart, right, so I know I have a POC. What is this POC here? That's not really POC there. You have a POC here that's been holding the 335. If we are able to break below this, we're going to the 328. And then once we break that, we have a demand zone at 320, which was not based off the VPOCs because there was none there, but it's more of a candlestick demand zone that we found. Okay. Any questions so far on VPOCs and POCs? So previous day moves around on TV. On TradingView, you have to use 30 days, 30 minutes. And we can cover TradingView as well. But so far, does everybody understand this piece right here? Let me just move this chat to my other screen. I can see this when you're typing.
Yes, sir.
So what questions do you guys have about POCs, VPOCs? Do you guys understand how to find them? Like, I can find them in my sleep now, right? So there's a VPOC here. I see the price never came back to test it. This will be a major, major supply zone. Once we do, and what would you do when this hits? What would you look to do when this hits?
Short it.
You're looking to short it, correct? So this would be a major VPOC to short from. And it will hit, guys. I promise this will hit. So good question, Cash. How do you remove the POC? So you want to keep fresh POCs, right? I mean, sometimes, like lately, if you guys recall, I actually had to go to 90 days and look for some supports. Like we went to 124, and you can tell that even the 124 POCs, like if you look at this cluster here, they acted as a cluster before, and it worked, right? You want to keep them within 30 days, right? And I usually mark the fresh ones. Obviously, I look at it every day, like when we are done with the trading, to see if it created a VPOC. I believe some of the stocks did. There was one that created it. I was watching it. It wasn't a video. LMT. Okay, I don't like the stock that much. It tricked me. Okay, so here's LMT, right? This is actually a good lesson here. So you guys see the LMT is running like crazy. Like, I mean, if you look at this, so let's just kind of chart it, VPOC. And if you're not going to trade it, that's fine. Just use this one as an education for when you watch how this works. So here's your volume. I'm looking, not that. All right. So here's this one. Come on. So this is a VPOC here. So this is 227.
Do you change your setting? Hey, real quick, do you change your settings so you can actually see those bars, the volume bars better? Like, I can't see them worth a damn on mine.
So I did quickly here. If you go to the settings and you click on the setting profile on the VP, you scroll down, there's something called globals. And what I do is that profile area, usually it's on the gray here, and I have hard time seeing it sometimes like this. So what I do is I like to change it to like white. And I don't keep the profile for when I'm trading just because it's a lot of stuff on my screen. So if you change it to something lighter like this one, like whitish, I'm able to see it really nice now and know where the standard deviations of the profile are.
That's perfect, man. That's been driving me freaking batshit crazy for like 2 weeks now. I've been trying to mark these things.
All right. That's what I do with these as well. It was, yeah, I don't have the best eyes, so it definitely helps. So then you look at this box here, right? So you're seeing now what is happening here on LMT is that we're having a couple of what can happen in terms of, if you look at Wyckoff, what do you guys think is happening here, potentially here? Okay, well, look at this consolidation here. I mean, do I have to count the days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 22 days of consolidation in this box. I'm not suggesting anybody knew about the war before, but I'm just suggesting that somebody's been buying LMT, that's all. You guys see this? So this is your huge accumulation. If you read the book that I recommended to you guys, what's this called right here? When it pops out of the accumulation and comes back to it. I'm testing to see who read the book now. What do you call this? Anyone? Come on, somebody had to read the book. Okay, well, this is not very convincing, guys, from anyone here.
breakout?
No.
Breakout of accumulation.
Here, I'll show it to you guys. This is called testing the market. When they break the zone, here. If you read this, right? You break the zone and you come back to it, and look what you did. They tested to see if there's buyers, retail, are you going to follow? Retail said, oh yeah, we're going to follow. And look, they came back, they loaded a little bit more, and then, I mean, they loaded all the way from average of 388 to 462. That's a pretty good return so far. So it's called test the market. Test to see if the retail's on your side, if they're going to follow. They already manipulated your mind with the war news, so you're looking instantly. People were looking at Lockheed Martin, RTX, and all the other, war stocks. Everybody was looking at them, so they succeeded, right? So they knew the test was going to come. They popped the price. They got people a little bit, oh, never mind, we're coming back. They freaked out, and look, they went higher. So now you're looking for a distribution zone that's probably going to happen at some point. If there's any talks of war, relaxing or any agreements, then you look at these VPOCs here that we kind of drew just now, and you see how well they're going to be responding. There's going to be buyers pretty much on all of these levels looking to see, hey, is this a good buy here? But most likely, where do you guys think this is going to come back?
395.
395. It's going to be back at 395, believe it or not, at some point. They also have a major VPOC at 369. So, right here. So now that you have these zones, right? I mean, if you mark these POCs a little bit better than I did, like this guy right here, you mark this POC to be right here. And as long as they're talking about wars, you can buy these drops as bounces. And I mean, LMT, like the contracts on Friday, they went from, I'm not kidding, they went from like, I think 150 to 9. I was looking at 450 calls. Oh, never mind. Maybe, oh, this is last week's. Let me see, 304. They exploded on the same concept here. Was I looking at? Yeah, 450. So look at these contracts. So you had a consolidation on the contracts here. You guys see it, this area here. This was your zone that it was consolidating. And then it went from 5.5 all the way to 12. And these contracts at 9:30 dropped. Let me kind of go on 5 minutes. Look at this. These contracts dropped as low as 136. So give you an idea, power of options, 136 to 12.4. So $136 to $1,240 you could have converted. But you have to be focused on few stocks, not be all over the place scanning. I don't personally use any scanners during the day. I just have a volume scanner on the bottom that tells me what's moving in the momentum. And if I see something, for instance, here you could tell that there's a lot of oil stocks, and X was there, and then there's whale. So it's telling me there was a rotation into maybe some oil and stuff like that. That's the only thing I use. But I mean, same concept here on LMT. If you had the levels drawn, you could have been playing them, and I actually missed it. I had it charted here. This was my LMT here. I said once it breaks 447, this was a go ahead to 455, and I said 460 next. If I should have stayed focused, I would have converted probably 5K to about 50K on this. Okay. Any questions on VPOCs, please? I want you guys to ask me on this. Hands too quick. Yep. So you have the POC here. You have a nice demand zone here being created by two POCs. So this right here becomes a really, really nice demand zone for it. 410, you won't see 410 real quick, Josh, in coming days. Yes, it's a very big magnet here, as we identified the VPOC, but it will not happen so quick. It's going to have buyers to show up at 424. Once 424 breaks, that 410 is going to be probably within a few candles that it drops to this level. So that's why we identify these. And then you guys see here, this was actually an unusual and a bullish close and volume profile here. I just want to show you something. So usually when you have a close that there's a lot of volume accumulating at the top, that's usually a good sign that this stock is going to continue the next day. And it's something you guys start looking at when you zoom into the volume profiles. So to give you a contrast of what I mean by that, a B-shaped POC, you guys see this one right here? A B-shape did not have a lot of volume here on the top. You guys see that? And look what happened, obviously, the next day. Where did it come back? Came back to the POC here. This day here, there was a lot of volume. It's called P, right? You guys see letter P here? Anyone? I don't know if there's a brush here that I can draw. No. So there's not a brush here. So you guys see letter P here. It looks like letter P. This looks like lowercase b. When the volume is concentrated towards the end of the closing here, usually, I don't mean must, indicates it's going to go up through the day and continue. Here, obviously you had the P, but you see how it came back down. So it tricked you, but it came back to that day where it broke up from where a lot of volume was there. So this was a beautiful entry right here. Look at that. Knowing this and that the most volume accumulated, there was a P shape here, and then it came back down. Yep. Any questions on this? When you move over to the prayer position, plus and toss, will you 3-minute time frame in day or 5 day? My 3-day is, let me see, where is this one? Well, I don't know why this happens. I lose my time frames. Look, lost them all. Okay, let me see. Where did it go? I usually do 5 days, 3 minutes. Katuti, the levels on POC on for instance. So any questions on TOS that I can help you guys answer? Whatever that might be on TOS. I'm giving you opportunity to ask away any questions on TOS you might have.
Shorty, do you recommend TOS over TradingView, or do you look at them to be the same?
I like TOS because if you have TOS, right, you can execute the trades, right? And if you guys remember, I use a watch list for options, and you guys see this linking feature, right? This one is linked to this chart right here, which gives me the chart for the options. I can quickly see how the option reacted to certain levels. And then also it links to my active trader here on the bottom right. So if you guys are kind of looking here, so my active trader here, I'm able to, when you guys see how the hell did you get in, within split seconds and out, I use active trader, right? I buy here, I sell here quickly, and I show you guys this live, so no purpose of me kind of showing you this now when the market's not active. But I show you guys that live, what I do. I use the active trader to open, buy, and sell. And it looks kind of squished here, but I do use a little bit bigger monitor when I'm trading on TOS. I put it on 49-inch monitor, and it looks much cleaner in terms of spacing and stuff. It looks kind of congested now. Kasha, I responded on the ASHI candle. So ASHI candle is considered a previous candle. for determining, the strength, the open and close of the candles. The regular candles don't, and you avoid a lot of fake outs in terms of ashi candles. That's the reason why I use it, because it really helps me kind of understand it and not get faked out too much. Okay, so here's SPY levels. Let me just kind of look over this. Okay, a lot of you had some questions on the full send. So full send is a proprietary script that I have in TOS. We had like a flash sale, I believe, maybe a month ago with some of the people in the Discord, where I wanted to kind of give them the option of buying it at a discounted rate because they joined the Discord and they've been here for 2 months or whatnot. So I was trying to kind of reward the members and give them the ability to see what I see and have some of the features. It wouldn't be fair to me to just hand it out to everyone just because how long it took me to build some of these strategies and how much money I've actually spent myself on developers and statisticians from different schools and whatnot. So that's why I'm charging. And, if you're paying for it, most likely you're going to build a relationship with me and, build the trust. And a lot of people that did build that trust actually gained more out of it than just a script. And I'm pretty sure a lot of people that are on this call can kind of vouch that and say, yes, it was more beneficial. And I gained my money back after this script shortly after, whether it was, we had trading or another way it came through, but usually it pays you back within sometimes a day or 2 days, if you're smart about it. Okay, so the script that I'm showing here, and I just want to quickly cover it because you guys have been asking questions, for intraday stuff, and I honestly have no idea why all of my stuff just went away, like all the time frames went away. Let me just quickly add my typical ones. So I do 5 days, 3 minutes. I'll do this. I'll add another one. I like to have, actually, I'll do 3 days, 2 minutes. Add 5. I'm missing the 10. 5 days, 10 minutes. I'll add that one. Sorry, I like to have stuff lined up the way it should be, so I apologize. This one needs to be 30 days. Okay, so we'll apply this. See, they're there now. Okay, so when I look at full send, I look at it mainly in 5, 10, and 15 minutes, and I definitely like to use ashi candles on this. The higher the time frame, the more potent it is, right? So if you look at it, for instance, on 180 days and 1 hours, you might not get much because it's taking too much data to calculate stuff, and then it considers too many things. So let's say I change this to be more like 90 days. Let's see now. So 90 days, 1 hour. So for instance, you don't see any besides the one on the top here that many of us shorted at 440 here on SPY, right? And if you guys know SMC, she's been using kind of arrows and this strategy for some time. And I think she took her account from 1K to about 15K, I think in like 4 or 5 days, just trusting the candle, trusting the full send. And when you see a full send, let's say I'm using 5 minutes, right? I just want to show you guys. When I see a full send on this candle, it doesn't mean that I will get in immediately as soon as it pops up, right? You have to kind of use common sense. So if I would switch this to candles, right? So it showed up on this candle on the regular candle. For me, this candle here, the break of this candle high and low would be my entry and a stop loss, right? So you break above this candle here. Let's say you got in on this candle and you're like, I'm going to be early. Well, sure, you can get in on this candle. This would be your nice entry. And look what happened here. You guys see that? It came back, and it literally came back to that candle, and then it flushed down all the way, I guess, for $5. So if you use 5 minutes in this case, you probably could have made 400% or 500% on this SPY put. Then what we talked about in the beginning of the class, and I know I'm kind of jumping all over the place, but I get too excited when stuff works. If you look at this, right? So here's my, higher lows, making higher lows, and I'm connecting 3 points. Usually you want to have 3 points on the trend line. So here are the 3 points. And let's say you didn't want to short this, you didn't trust this. Well, you could have shorted this, but then your reward was really tiny because you had this 124 POC right here, and look where it bounced from. It bounced perfectly on this demand zone that we drew off of the POC on 124. So, but if you took the trade here, when this systematically told you at 432.8, and you know where we have the levels, so we had the 430 level and we had the 428 level. So you probably could have made a couple 100% and pay off any investments that you might have just using this right here. And then same concept on the upper side, right? So if you're looking at here, right? So here's a trend line 1, 2, 3, 4, maybe even 5 here. Once this broke up, and you guys see here, let's say you got into a late trade at 345 or about 430, break the VWAP, and it broke that previous level. We had 430.83. Well, man, you would have been driving this for about $2 in about 10 minutes, and your contract probably would have gone something crazy. I'm not going to go back and look at it, but it would have been substantial, probably quick 100, 200% on these. So that's how I use full send. I would use it on 5. 15 minutes is really, really accurate. I've been using 15 minutes a lot more. I usually have 15 minutes, 5 minutes on these just to see. So like here, you see full send showed up pre-market at this level, 436, whatever, 51. We had this level of 436.11 for some time because it was a POC from the 25th. It's been playing a crucial role in price action. Here you have a trend line. It rejected that perfectly. Then we had a full send for shorting again, which means it's making a lower high here as well. We shorted it all the way to the POC, and then basically you just kind of play what you see. So if I don't know, if you go through different stocks and you notice the full sends, so full send on 15 minutes showed up here at 231. You took that trade, you would have been driving it all the way to 224. Not necessarily do you have to drive it all the way down. 225 would probably be a good psychological level to take money off, and I mean it went dipped really below that. Let's see, if you find it on 4 hours, it's usually good for a swing. So full send on 4 hours does not show up often. So I'm on 4 hours, let's see, 180 days. That's correct. I use 5 and 15. Casper, what I do on 3 minutes might not be, and I'm not saying you guys are definitely not good enough, but it takes more skill to use it on 3 minutes than it would be in 5 minutes solely on that indicator itself. Could you have shorted it on 3 minutes right at open here? Yeah, definitely. But you don't want to lose your trust and confidence in something you're using because you're not considering anything else in terms of price action, right? So you can use the 3 minutes here, but know your levels and entries, right? Know your stop losses so that way you're not agitated or don't continue trusting something you're having, right? So 3 minutes might have too many negatives, right? Where it breaks out or moves out and you might not like it, right? So I suggest if you're new and learning, minimum is your 5 minutes. 10 minutes is really good as well. That's what I used, I think, a couple of years back. I mean, I think it was the only thing that I used in terms of full send was 10 minutes. So I think I caught, is it Booking? Oh, I won't be able to find it, but it was a long time ago. But Booking was something that I traded with the bad spreads on it. So whenever full send would show up on this guy, I could make a killing because the moves were so big. Like full send showed up here at 2,600. I mean, you're talking about $200 drop on 10 minutes when you find these on Booking. So it's something that I consider, right? I will look at different time frames and kind of see what's happening, right? So here you had a full send to go, and you went from 25 to about 2,715, so $200. If you look at it on a weekly, you kind of scan through it and see. So you had a full send. Obviously, not many times did this full send show up. Let me just change this. So here I'm talking, what is this? From 2018, let's say even, I guess, let's say go to 15. Since 2015, there was only 3 full cents that showed up on this chart. Okay, so that's the reason why I trust it. Like right here, full send was shown. It did not meet some criteria on this wave here to fire it. If you look at, for instance, SPX, we had a full send that showed up right here, and a lot of people took this that I know that made a lot of money on this full send. I even posted this on Twitter. People are laughing that there's no way we're going to get a bounce from there. Well, it did get hell of a bounce from there. I think we went, from 4114, you went to about what is this? Almost 4,400. Then you had another full send here on 1 hour, which I don't know if you can definitely play these, but you have to be cognitive of news and what's going on, because this indicator does not know there's a war happening right now. So unless Sequence can code something, it doesn't consider any feelings. Okay. People ask me a really good question. Will the full send make me a better trader? Not necessarily will full send make you a better trader, but you will have an item in your arsenal that will give you the ability to confirm your bias or against you when you see something. If I saw a full send show up here and I'm debating about going long on this, well, I would think twice about it, right? Here was a double bottom. We had a double bottom here as well. So there are certain things that I'm looking at, right? I know this is a double bottom here. Here's your neckline now at 44.15. Then you have a mini double bottom here, right? 1, 2, and your neckline is the full send. So, would I go long here? Sure, if it breaks this level. But no, there's a neckline off the double top being kind of like right here. So 43.50 becomes a fairly important level here. And I guess we marked monthly pivot here, 43.61, which is some of the tools that we have. So that way we know the levels which we can reject and respect. If you don't know the levels, they'll come to you as a surprise, and then you'll cry later that you lost your whole account. Does that answer any questions you guys might have had on full send? So I like the 5, 10, and 15 minutes. 30 minutes is really, really good too. If you're a more conservative trader, this is pretty good. If you look at SPY, for instance, so you had a full send here, you had a full send here. We just recently had that full send here at the 433. So it's pretty powerful in 30 minutes. I would not refrain more from having different time frames that you look at. It's kind of like multi-time frame analysis, so that way you can tell what is really going on, right? If you look at, for instance, SPY, I'm looking at on weekly chart here, and you guys see how many times the full send show up on SPY? Not many times. So this is your first wave, third. This is the biggest third. So this means it's triggering the fourth wave. The fifth wave might be even deadlier here, right? So let's see what happens in terms of Elliott waves, but could be dangerous. Okay, does this help answer any questions you guys might have? I'm sorry, regarding this full send. Okay.
Great information.
See what else we had on our agenda. So we covered the Orbs and Confluence Points. We covered the POCs and VPOCs. Does anyone have a headache from the new guys yet? That's like, okay, well, what the hell is this guy talking about, and does this really work? Just try it. If you don't think it works, just try marking a couple of VPOCs and understand what the price is doing. So VPOCs become point and entry levels where the big boys bought the price really quick, where a lot of unfilled orders stayed behind. And usually when that happens, these big boys like this guy right here, maybe his order wasn't filled. He's not going to be chasing like most of you guys do to get a fill here. It's like, no, screw it, man. I'm not going to get a 428. I'll buy it at 434. They don't do that. They leave their order at 428, and when it comes back, like this one did here, it'll execute. There's more, we'll execute, and then if there's no more orders here to be filled, then maybe the buyers, the sellers take pressure and sell through it if there's no enough action on it. Okay. Any questions so far?
Extremely informative class, Shorty.
Thank you. And now we'll switch quickly to TradingView, right? TradingView, same concept. I'll start from the beginning. If you don't like my background, I don't care, especially you sequence. So the first thing you want to do is you want to go to the technicals. You click on indicators. Then you want to go to technicals. There's something called volume profile on the tab. You click that. You want to click on volume profile, session volume. I don't even ask you what the difference. I think it looks better. This one here is the one you want to select, volume profile, session volume, which will give you these things right here that you're seeing. Same concept. The only thing that we don't have here, we don't really control the range here. You can control the range here if you mess with the bottom here, right? So if you do like 30 days, let's say, so here's your 30 days range right now. If you do, year to date, it gives you different ranges and you can play with that, right? So I just kind of decided that I do it whatever. I don't even know let's see what I just clicked here. I shouldn't have messed with that. I don't ever mess with this bottom stuff here. Obviously, you guys can tell my skills in this. So let's just kind of look at it same way as we did in TOS, right? So I'll start, give me a stock that we never look at. I think I don't ever look at Kroger. Here's Kroger, and it had a pop. Sequence, stop it, I don't care. Same concept. Here's a level, right? And look at these beautiful markings that look so clear on a chart. So here's all these levels that I just like to mark them for now, and then we'll kind of mark them and what they are. So look at all this, right? And then one thing that you want to pay attention to, right, is leading to this explosion here is how many days it consolidated between certain levels, right? Between this level and the bottom up here, I guess if you want to call this POC, went from January 13th until March, so 3 months, they were consolidating to buy this up, and look at the explosion. So most of these guys here, they probably, a lot of, multiple POCs happen here on the bottom. You guys see that, right? So if you look at this zone here, this here happened a lot. A lot of price action happened about $43 on Kroger. Then you see that there was some accumulation here at this level as well. There was a POC here. So you have at least 4 or 5 POCs that are lining up at the same level. So if I was to kind of mark these up, it would probably be something like this, right? But this whole area on the top was key, right? That's where they popped it from. But now, when they did pop it, they left a couple of things that were unanswered. So if I look at this POC here, I'm just looking at this POC here right now, trying to find what is a good, value area for the volume profile for me to draw. So I'll draw this one here, reset the chart to get it back. And then here's, you have the POCs here. So let's see. Okay, so this was a new day here. So this is regular hours. I'll mark this guy as VPOC. And this is from 3-3. Then here, we have another guy.
You left your candlesticks on, Shorty.
I don't even know how to hide these in here.
Go over where it says Kroger in the top left.
Yep.
No, down where it's typed out above,
Okay.
and
Yep.
click the eyeball.
Oh yeah. Oh. Wow. Oh, that's so cool. That is pretty cool. So we have a VPOC here. Wow, that's so cool. Why can't ThinkOrSwim do this? Wow, you just made my day for charting. Wow, amazing. Okay, well this is a POC here. This is 3-4. And so now, if you look at this, right, and if you press this magical button here, you see the candlestick. So most likely we're going to come back. There's a little, if you look at the volume profile, there's a little bit of volume here. So if I was to play this, right, it would get a bounce here, but I would definitely look to short it for intraday level. Below this here, 57.16, high chance that we're going to come back to this level here. I don't know why, but sometimes it doesn't grab my like rectangles. Okay, so short below 57.6, and you see, I mean, it had a huge pop. So eventually they're going to sell their shares that they accumulated. And also this company pays great dividends. So depends when the dividend date is. That's when you look, you know, after the dividends and they collect it. So there's the earnings here. We just kind of look at the dividends when the schedule is. So they pay their dividends on February 14th here. So the next one is probably 3 months. So it'd probably be somewhere around here that they're going to pay the dividends. So I would expect another sell-off here. Okay, what row layout do I use here? So for this one, you can change this to be 100, and that's what I usually keep it on. So if I change it to 168, 68 is our standard deviation for the value area volume, and then 100 is just the row size that I use for it. And then you can play with this, like to get more days out to be selected on this POC. That's why sometimes I change it to look at it, to see how many more days I can grab. I guess you can play with these levels to see what all do you grab. Like here, I'm grabbing all the way until November 4th with this setting here, and then kind of just play around with it. Okay, so that's pretty cool, man. I'm so excited about this. So if you look at Tesla, for instance, what just happened? Okay. So if you look at Tesla, for instance, it's been really choppy, right? You can mark these levels. I guess I can delete this inverse and shoulders. Okay, so if you have these levels here, you can start marking the levels and see how the price responds to it, right? So you have this level here, you have another one below that, right? So you have, I guess, 762. I'm pretty sure we'll have about 790, 780s. Yeah, there it goes. So you have these levels here, then you have, pretty certain you have some VPOCs above. And I just look at also, when I look at the candles, I'll look at what level did the stock bounce from, or where was the stock in consolidating for some time. So now that we added these, let me just remove the, so I'm doing this. You would actually zoom in a little bit and find the volume. I'm just doing roughly here. So if I was to look here, it would probably be somewhere around here. Tricked myself. So you see this one would start from here and up to here. And, you know, some people would grab this little mini shelf here as well. So let's see, we have this one. Here's that one. We got this one here, which is a tiny little guy. Then we had this POC, which was really well respected. And you see the choppiness, right, between these two levels. So most likely, like 877, you probably delete because you have a really nice. This is where I need to figure out. It doesn't want to select this. No. Anyway, so below this drop right here, if it drops below this level, below this demand, most likely goes down to 804. And then you guys see that we have a nice, really, really nice area here as well. So I would call this a VPOC here. This is Feb 24. So this becomes really the chart that we are after on Tesla. So if I was to look at it, right, and I would delete this zone here. So I would keep these zones as my levels on Tesla here. And then if you look at the bigger picture, right, I mean, that's where you can kind of make your living, right? So I'm looking at the daily here. We have a nice trend line from here, which could be also setting up to be a nice inverse head and shoulders. You guys see that drop? Now, if it breaks this, it can go higher. If you look at, for instance, 4 hours, it looks pretty good. So here's your 4 hours. And remember, when it gets tricky like this, when you're cheating yourself, you have the channel that you can use for this stuff. If you do something like this, here's your channel. You know, where could it go now that we have this daily channel drawn? Where is it most likely to bounce, right? So that's the kind of the question that I would look for myself. So if it was to drop, right, if it was to drop below this, I really do think it would go through this VPOC and kind of come back, or potentially bounce off the VPOC because it's a 800 level, bounce off of it, and if it fails, we could go to this VPOC here, which would be perfect alignment at 762. You guys see that? It would be almost too stupid not to buy here. And you can tell just on price action, there was a nice accumulation here in the volume. And then another trick that I was showing you guys is using the variable volume profile just to kind of see what is going on in terms of adding up all of these volume profiles. So that way you know where's the price, like what is actually happening, right? So if I look at this, right, I can tell, you know, this VPOC here that I marked at 804 had a nice shelf. When you combine everything that we see here on this chart, it looks pretty good. We also see that this range here was a nice demand zone. Skinny belly dropped through it. Skinny belly here, if we drop below this, guys, there's a high chance that we're going to get our $25 flush, right? And then if you drop below this, you know, 780s, or if you drop below 793, you have about a $30 drop here. And then, you know, if you wanted to go further out more, you will have to do more digging here on the volume profile on the variable one to see what is actually the next support, right? So here I zoomed in, you know, that's the last level of support, and you can literally just grab these. If you look here, this would be a nice, I would call it here, and see some of the silos. So this would be a nice demand zone for the next time. I guess this one bounced here. And then you see below that, right? So if you look at this zone here, I'm just drawing, I don't even, honestly, I'm not even looking at candles right now. I'm just looking at these levels here. And this is a major time frame that I'm on. If you guys are, I'm on the weekly time frame, and these become your demand zones. So, you know, you have your, so if you look at these demand zones, look how well these are lined up. So now you know your levels where we can bounce, and you can play this intraday levels, whether it's a 5 minute chart or whatever you're doing, and look at this level that we had on Friday. So we had this 830 identified. Multiple times I was screaming on Tesla, and I posted I think 30 charts on it, that it had a nice area that was building up. Then we went down literally. Or it was. Let me look at Friday. What day was Friday? 4th. Okay, yep. So it was this right here, I believe. Yep. So here goes 8. Yep. So if you look at this on 5 minutes, let's see, here it goes. So look at this. This is what I was kind of screaming about for you guys. This was a nice channel that it had, right? So if you look at this channel here, look how well it broke it, and we went all the way down to the target to a penny. So it was a pretty good play on and if you think about Confluence Points that we just talked about in the beginning, kind of putting it all together, right? So if you knew that this was the breaking of the trend line, that's your 1 Confluence Points, the trend bar was 2. Then once you broke the VWAP, you could have waited on this big red candle here to break and drive it all the way up, 50% your stop loss. And you see how well, knowing this level here, look how much it helped. And it also happens to be the 127 of the intraday levels. So when you think about your exit points, where should I take my money? Am I being greedy? Well, you have a major level that we identified previously for a demand zone. You have your 127 and you had your orb low. So it doesn't make sense to be a hero and expect it to drop to 804 when you have these levels to take money. And I took this from like 77 cents to about 4 something on Tesla. Okay, so that's how I mark them on ThinkOrSwim, on TradingView, I'm sorry. If you look at like SPY, actually, you can do this on SPX, I believe, here as well. If you look at SPX, let's say you do it on one day, it gets a little choppy here. See how there's really no volume on SPX. So if you're going to chart something like that, use your SPY and look at the area the SPY is in right now. There's a lot of support here, guys. Below 428, it loses support to go to 422. Below that, it loses it to go to 416, and then the cliffhanger starts about 410. If we were to lose that, then we get into a little bit of trouble on SPY. And this is the great chart that somebody built once we start breaking these levels here.
The I believe I can fly, but do I have a G suit is still killing me.
With the gravity formula.
Yes, all of that.
All right. So what questions you guys have? Is it starting to make sense? Does it help you guys? Honestly, if you want to get better, the only thing that will make you better is you actually charting and spending some time in front of the screen. Me telling you what I'm seeing nonstop without you practicing is not going to get you far. Let's see what questions you guys have. Anyone? Any questions?
You really haven't blown.
I'm sorry?
You haven't talked about the.
You keep breaking up. I don't know. Is anyone else, or is it just my mic?
No, it keeps cutting out right at the end. If you don't mind, Shorty, I'll just add something really quick.
Mm-hmm.
I would say to everybody, you really just have to learn to stop caring. Like, or not to stop caring, but just to be emotionless when you're trading. You have to trust your system. And, if you're using proper sizing for your portfolio and you're using proper risk management, mathematically, you can't lose. And so you just have to stop like worrying about each individual trade and just stop giving a shit. Excuse my language.
Yep. Nice way to put it.
I second that, 100%.
Well, yeah, the key is your psychology and your stop loss, right? I mean, what you're learning here, or if you don't trust it just yet, you got to put it to use. You got to back test it. Once you start trusting it, you got to trust yourself. You got to have confidence in yourself because nobody else will. Like when I don't take a trade like LMT on Friday, does it get to me? Yeah, but I have to move on. Like, right, I had the right idea, I didn't execute on it, and that's it, right? So I'll catch on to the next one. But the idea I had was right, which kind of builds the confidence for the next trade that I have.
I've learned to put my emotions to the side until the end of the trading day, where I'll either be excited, for having a good day. I don't really get down anymore, like if I have a losing day, because I know my goals, and if I keep getting that, like 2 to 5% gain on my portfolio every day, I'll get there. And if I have the occasional like 2 to 5% losing day, it's not a big deal. They're inevitable. So I don't really let that get me down. But, when I'm consistently green, after the trading day's over, of course, I get excited. Like, yes, I'm sticking to my goals. I'm following my plan, whatever that is, but you really just have to stop caring emotionally about each individual trade. And that's when things will finally take off. Like, it doesn't matter what indicators you have, it's that emotional aspect is so important.
Okay. Yeah, somebody was asking about BNGO. I don't even know what this is. Hmm. Yeah, I don't trade stuff like this, guys. I don't buy stuff like this. Okay. So what other questions you guys might have? I'm gonna chart some tonight. A couple of tickers for us, the usual suspects, and see what we're kind of looking at. But there's a lot of bear flags that are being built. Just keep that in mind. For instance, you guys see this one here. On the weekly time frame, you have a nice bear flag here. So I'll keep an eye on this, right? You see on the volume profile consolidated, you have this level that's fairly important here, 104, which you can expect to bounce. And then it has a little bit of a gap here. All the way, first one is here, 97. And then you have a little bit here, and then this becomes your demand zone right around here. So they might take this out and take it all the way. All right. If there's no other questions, I think that's it. I mean, if I can help answer any other questions, I'll be glad. But I think it was a fairly informative class for most of you guys. And before I go, I'll just give you an idea. The way you can trust VPOCs, and the beauty of it is everything that goes up must come down. So just to give you a last example of the VPOC, a lot of people I got flamed on Twitter by telling people that AMD was going to come back to 109 before it goes back to 131. Of course, people were, they were, excited when it broke the, high here of the 121.85. And if you just go quickly look on Twitter, everybody had this level of 121.85. They said, once it breaks this, we're going to the moon. I wrote something that, that we're going to come back to this 109 level before the next leg up. And look, this was a VPOC here, and look what happened. They brought it right back to the 109.59 level. So now you have the VPOCs to the upper side, right? So these levels become your next targets, which will happen also quickly, just that people don't know. So like this one here is your VPOC March 2nd. Yep, so this is your VPOC March 3rd. Here, if you mark this one, and then, the same thing as I did for past 2 hours, I look for a standard deviation or nice low volume distribution here. Am I wrong sometimes? Yeah, why not? I'm sure I'm wrong. But I look for a nice low volume here to see what's going to work, what's not going to work. Here you see this VPOC here, probably come back to this level. This is just a POC now. And this is March 1st. Okay. And then you guys see what we left here. It's a major VPOC, and these will be tested. And we're going to come back to these. So this is February 10th. That's going to drive me crazy, but I have a different format, sorry. Okay, and then if you look kind of here, do you guys notice something here? What happened?
You got two, well, a POC and a VPOC basically right at the same level. That's going to be a major, major bounce area.
And I tell you what, has it been a major bounce here? I remember when everybody was bearish, we were talking about AMD taking off from this level. It took off from this level multiple times that we identified, right?
Yep.
I actually hit it both times on the shares. Here, I missed it on this one here.
It even gapped from there.
Yeah, and here you have it. Here we have, like you said, nice little gap that it just filled here. It filled it previously, but it becomes important. And if you zoom out a little bit, right, this trend line here that you guys are seeing always can act as a bounce. If you're scalping for the trades like this right here, can be a nice trend line break, right? And if you look at this now, I'm on 4 hours, and if you look here, right, so you have a nice trend line here. When this 121 breaks, or let's say the 121.88, when that breaks, there's a high chance that we're going to go to that 130 level that everybody's anticipating. So I'm looking at this break right here. This will be a major, major confluence point for us to get in on some longs. If you want to get in on the longs at 103 level, you have to be quick. Buy 2 months. I'll buy 2 months contract out for 130. And most likely it will hit. So if I look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9 days it took to go to this level. Right here it took, it hit 104, and then it went in 3 days, it went up $20. So if they drop it here, I'll watch and see if I can get, if it drops here, I'll probably look to buy, 115s, 120s, because I'm not seeing the same power off of this demand zone. It's getting weaker. It hit here first time and it went to about 130. It hit again, it went to 120. It hit here. I don't expect it to take off all of these. I would anticipate it to be something smaller and potentially go to this level here, which would again make it would make a lower high based off the demand hits. So this would be a good, nice target. If it comes back here, then we're going to go to the VPOC March 18th. And I don't use a lot of, you guys probably never see me use any RSI, like I know some of you guys do, and that's okay. If you look at stuff on daily, if you use, divergences and stuff, it's not a bad idea to plot these divergences and see if there's any hidden bullish divergences between them as you're charting. So that way you know, oh crap, we're approaching a demand and we have a bullish divergence. In this case, we don't have one, but you can find some of these like that and they become easy money. That's why I was just bringing up RSI. I know some of you guys use it, and that's how you can kind of use it together there. But man, this feature, I'm so excited. Like, why didn't you tell me this before, man?
I thought you knew.
Dude, I'm so excited.
Which feature is that?
Like, I can hide candles with one click on TradingView.
I guess you just have to watch my videos, Shorty, because I show that all the time.
I'm sorry, but I taught you all this. No, I'm kidding. I always learn from people. I'm not being cocky, but I do learn from everyone. I notice people trading differently, like Earth, the way he trades his stuff. I mean, it's cool, right? I mean, it's something to notice, and if it works for him, I'm sure some other people can benefit from it.
That's amazing.
Yep. And that's the beauty of trading, guys. Just the way I do it doesn't mean you have to do it. If you can develop your own strategy, and actually I want you to develop your own strategy using all the tools that I'm giving you, right? I mean, I think we're giving you a lot of options, tools, trend lines, naked trading, whether it's systematic indicators or whatnot. I think you're getting a full bunch, but I can't tell you how to trade. I can tell you and give you the weapons, and then you create your own weapon on how you're going to trade. And a lot of people that I'm seeing, from the profits in the journals that we are reviewing, I'm seeing actually people building their own strategies. Like I talked to SMC, I talked to Earth, Trading Mindset, Catching Rockets. I mean, few of them have built this out and made it their own. And that's the beauty of it, right? And then if you decide to stay in the Discord and, or if you get 30 days straight, you can get a free Discord. But as long as you're learning and you have the ability to become independent, that's my goal. To be honest, I really don't need the Discord for any purpose in my life. I can trade on my own, but I think it would be selfish of me to kind of keep information to myself. And for people that want to become traders, I think it would be selfish not to share what I know and the troubles that I've been through and what helped me kind of grow as a trader.
Shorty, oh, sorry. Didn't mean to interrupt you. I was going to ask you, can I bother you to look at something really quick? Not for me, actually, but just for everybody. If you go to SPY from Friday on the 3-minute, and then turn your volume on and just look at the first bull flag of the day, just show people how the volume ramps up before the breakout happens. I think it's good for people to see. All
right, so March 4th, 3 minutes. Let me add volume. Where's volume? Here we go. Which one are you talking about?
That first bull flag, right around 8:30-ish, 8:45-ish, right around there.
This one here?
Yeah.
Yep.
You start to see the green volume building up before the breakout even happens.
What he's talking about is that you have a mini intraday bull flag that hasn't made any higher highs yet. So if you look at this, right, so it has a higher high. The structure of the market is here. This is your structural market sign, and this is your first target for profit if you're going to play the flag. The second profit would be the initial balance high, which was here, which was at 432.49. And I guess we had a level at 433.13 from somewhere, I don't know where. We'll have to figure that out. But anyways, yeah, so he's right. If you're looking at the volume here, you had initial volume here, which was super high. You see the push right here on the volumes, it's above the average, right? Then you see a descending volume on falling, right? So you have a nice, if you look at the candlesticks, people trade this, I trade it as well. You see a nice hammer here. Once you broke that hammer, you can short it. But if you draw a parallel line from this wick here down, kind of like, I guess I did here, maybe not clear, but you have a nice hammer here. You guys see that? There's a nice candle here that you want to learn right there. So if you look at this candle, it's pretty nice candle, and then you see the volume stepping up, and the takeout was right there. And if you took it over this, great. Some people might have even waited to take it over this 430 and play this here about 50 cents. I personally would buy it on the bottom of the touch of here of the hammer if I was trading price action. And this is the break of your structure. This is what I call BOS, break of structure. So once this breaks, usually stuff will come back and retest it. And if you look at any candles to your left, you'll find some that have a pretty big wick. So if you're just looking price action right here, look at this. So I grabbed this candle and I drew it to be my demand zone, and look at this, boom. It basically came here and touched the trend line bottom of here multiple times, stayed inside the box, and then at the end, the typical movement that they do, they broke out of it. But yeah, he's right. The volume ascending, and there's also volume anomalies that you got to pay attention to. I think I've held a class on this before, but volume anomalies are in the Anna Cooling book that I suggested that everybody reads. If you haven't, I still suggest you read it. It'll make you a little bit better trader and understanding how the volume works with the price.
Shorty, what volume indicator is that you're using?
This is just a regular indicator that you have to go to style and click volume MA, and it gives you an MA.
I've been trying to find that. Thank you.
And yep. See, you learned something from me.
I learned a ton from you.
Here's and you can change this. I like 20 on this. Like, I don't need more than 20 days. Some people use 50 here. I mean, you're welcome to use whatever you like. But here's your previous 50 days, and you're able to tell, how's volume doing compared to the previous 50 days. I like 20 because it gives me a little bit more response when I'm trading. If I see this volume spike here, it looks good, then I know the next bull flag will also work. The retest of the break structure is always a go-ahead. We can talk about that another time.
Oh, that's awesome. I'm excited as you are to learn how to turn off your candlesticks.
Perfect. Okay. What else? Where do I find out to use TOS scripts? Which TOS scripts, Henny, are you talking about?
You could really blow everybody's mind with the Keltner clouds.
Yeah, they're not ready for it yet. We'll do another class for the new guys with the Keltner channels. I didn't want to give them too much so they don't feel overwhelmed. But yeah, I mean, once we get to the Keltner channels, they'll be blown away. As long as they know they have it, right? You guys do have the entry or access to all the Keltner channels. And look at, I guess, they're loading everything here. Script, where is it? There it goes, Shorty Cloud. So he's referring to these right now that you guys, where is it? Here. So if we go here and just enable a few of them. Let's do 4 daily, weekly for now.
Breaking out the big guns.
Yeah, this is the big boy stuff. Most people are not ready for it just yet, but so here's the Keltner channels. So you guys see a bunch of lines. Don't freak out. That's why I didn't want to bring it up yet. But basically, we have multi-time frame Keltner channels. Let me take out all of these for a second, just to kind of give you guys the idea of like 4-hour cloud. So here's your 4-hour cloud. If you guys follow me on Twitter, you'll see that I post these sometimes. So the top of the 4 hours identified here as well. The middle line is the 4-hour mid. And then here's your 4-hour bottom, which we play this only 4 ways. There's only 4 trades that you take off of the clouds. And basically we play it. We'll cover it in details in the next class, but I need you guys to absorb the VPOCs, POCs, and Orbs first. And then how do these clouds help us? We can cover another class so you guys are not really confused. But just know that we have clouds that are more accurate than anything else you've seen in your life. So I'm not sure. Oh, January. Oh, you're talking about Veervoot? Yeah, so Veervoot's a strategy that I used a while back. Basically, if you're on ThinkOrSwim, I'll share this with you guys. There's a strategy that I shared with you guys where you have these little dots that show up. Obviously on the bottom, if the green crosses over the red, you get a dot and that shows up. You can take it long. When it shows up dot on the top, you take it short. And it's simple as that. You can use it on different time frames. I don't suggest you use it below 5 minutes. 10 minutes is also pretty good on these dots. You would avoid a lot of negatives on it here. So here you had this. And it's simple as it sounds, honestly, but I like 5 minutes in this one. Okay. Questions regarding, I guess, the indicators. So I did give you guys another chance on actually having the ability to purchase the Orbs plus the full send script. It will be $650. I will only do it once we have about 30 to 40 people that are interested in it. And the purpose of that is the more people I have it, the less trainings individually I'll have to do. And then, holistically as a group, we already have about 50 people that have it. Once we get more people to line up, it will be really like a synchrony. Everybody will be lined up on full send. You guys will be talking the same language all over. And I think it'll drive a lot powerful community as a group to identify stuff and talk and be able to point out certain setups that some other people might not see. So if you're interested, you want to be part of the 30, 40 people that will get it this round, I will most likely not do, I was thinking not to do another sale till end of the year, but I will have potentially another sale when we open up the Discord in July. So the Discord right now is closed. So if you joined, you're in here. If you decide to leave, that's fine as well. You will not be able to rejoin if you don't like it or for whatever reason you decide to leave. We will open it up in July and the price will most likely increase. And this helps us not only control the quality, but it also shows the seriousness of traders. If you're willing to invest more in your education, then you're most likely to take it seriously and kind of educate yourself and learn. That's one of the reasons why I do it, but it also helps with the quality of the Discord itself, right? So, if it's $10, I'll be wasting a lot of time for people that they're not willing to learn, and I'm not willing to spend my own time on these people as well. So that's the reason why I will be, opening, closing the Discords once majority of the people that joined March 1st are understanding this. And, it takes about a month and two to get familiar with all of this. Once you're familiar with this, then, you have the ability to stay or whatever. If you want to leave, you can leave. But usually, for traders that join, you cannot learn trading in a month or two. There's no way in the world you will pick up and become profitable within a month or two. 6 months, is it doable? Yeah, I think 6 months is doable. Picking on Catching Rockets, when I met him, I would say that he wasn't consistently profitable trader. I would say based on his profits lately that he's been a very consistent trader with 5%, 4% daily. And if you don't think that's a lot, then I'll give you a homework. Take $1,000 and compound it 3% daily for 265 days and see what you get.
Yeah, that's completely accurate. Wasn't consistently profitable when we met, and now I am.
So if you have questions, I'll post. Let me do it now. If anyone's interested in getting that package.
Speaking from personal experience, the full send package, it paid for itself for me in 2 weeks.
Yep. And, I'm not trying to sell it. If you guys don't want it, I really could care less. I'm trying to give it to people that are interested in learning. I know SMC, she's been on a tear. Like, she's been literally killing this game of profits with the full send. So I'll show you guys here. Let me see so this is her trade. She was beginning balance 1,000 on March 1st. Okay, what date are we in? We are March, let's call it in 4 trading days. You guys see her return?
She's been.
And if you see what she's been using using full send. When she saw it show up on a daily on the 4 hours on SPY, she swung some SPY puts, and she also hit the BBY puts on it. And look at the profits that she's been accumulating. And I think the bottom trade's still open for her. And you guys also have this, I believe, one of our members shared this not study, I'm sorry, but journal, which is excellent. This is much better than the one I used. And I also use this one as well now. So, and as you guys know, if you stay in a Discord and you get picked on to show me your journal and you don't have it, you will be out of the Discord. So make sure you keep your journals and your trades, because it will only show you where you're making mistakes. Okay. Any other questions? And Jeff, is that you speaking? I'm trying to recognize your voice back. Is that Jeff who was speaking? No, it wasn't Jeff.
It's Jason.
Oh, Jason. Okay.
Oh, if you scroll up in the chat, Shorty, sorry, SMG is it, I think. She posted a bunch of tickers that have full send on the 65-minute.
Oh yeah, I'm pretty sure. I mean, that's all she looks for. And I'll work on a scanner actually, maybe next week for full send to help us identify them on different time frames. TOS is not the best for like multi-time frame searches, but I can figure something out. So I'll look for something, see if we can help us. And what we could do then, if it does work, my idea was, how I have the script for Orbs where it tells me where the price is below or above. You guys see this? When I look at stuff, my Orbs tell me where is the stock, right? Baba is below, in Orb range, above, below. Basically tells me immediately. I don't have to look at the tickers individually. I know where it's at. I was thinking about adding the same column list with the scanner to tell me if it's 15 minutes, 10 minutes, 5 minutes, and like 31 hour, whether it's full send showing. It would just show green, red, green, red.
That would be amazing.
So we'll see what we can do there. I think it will help us all find some stuff. Yeah, I know. I tried sequence already once in my life, but we'll see. I'm sure maybe we can come up with something. Okay. I'll post right now on the full send and see who wants it. The first 30, 40 people will get it. Unfortunately, the rest, you'll have to wait till July to get it. So if you're interested, we'll go from there. And I'm giving you something that's, you're getting Orbs, you get the trend bar, you get the pivots, you get the watch list item, like this little thing that I'm showing you right here on the side. I'll give you that. Then I also included last time, and I'll include it this time, the arrows. So if you guys remember, here I had, I believe it was this screen here. No, it wasn't this one. It was this one. So if you look at these arrows, you get 2 levels of arrows, right? You guys see the small green, that's off the trend bar arrow, and then you have this big green, which is basically the custom code for an arrow itself. And usually these are pretty accurate on 5 minutes. So if you look at 5 minutes, you switch to Ashi candles here. These green and red big candles are pretty accurate. So I include that as well. So you'll have Orb, trend bar. And the only thing that I ask you guys is to build it on trust. Please don't share my script. I wouldn't share yours. So work on being ethical and being a friend rather than try and screw me over, which I can also screw you over. I have sequence in my back pocket, so don't try. Sequence, he just point and he hacks your shit away. No, just
What?
And Olsen here. Yes, Henny, we posted that journal. You just have to go through the materials a little bit in Discord and find it. Yes, those lines that you're seeing here. So every time you get like if you see this red arrow that popped up or a green arrow, you will have a line that's drawn automatically off of it, and it's telling you this is going to be a major resistance for the next time around. So the way I play it, I know this line was drawn here. I just kind of extended the line, 852 on Tesla. Well, if the green line shows up, or I'm sorry, green arrow shows up here, what do you guys think that I'm going to be scaling out profits just based on this? Well, I know that 852 was the previous resistance the arrows were telling me. As soon as it approaches, and I know psychologically that 850 level is important. So let's say I'm kind of here close enough. So I'm getting in here at 831. 850 is my stop, getting out, and I'll get out of there. And if I also know the previous support or was right here, right off of the arrow, and this one is showing up right here. As soon as this candle broke Orb 58.45, you went short. Well, you better believe that you should probably scale out as you're approaching, the 127, the Orbs, and you have this major level 827, which almost got hit to a penny here. So that's, and it's all about patience, guys. There's nothing to it. You wait, you get in, you get out, and you wait. You don't really don't complicate shit. It's simple. You just have to be patient and wait for your trade. There's no reason for the urging, oh, let me get it, let me go buy it. No, just wait. Patiently wait, and you'll be a successful trader. If you want to buy random shit in the middle of the action, then you're going to get, get slapped around and thrown away by market makers. You buy at support, you sell at resistances. And here you're having stuff automatically identified via orbs. You have these arrows that you'll have, and it's telling you different levels that you can look for rejections or support levels.
I use that line for a stop loss too, which helps out a lot.
Oh yeah. Stop loss. This is a beauty of it. If you use 10 minutes on arrows, if you just use it on 10 minutes on arrows and you use previous candle as your stop loss, so it showed up on this, use the low of the previous candle as your stop loss. Let me know. If you just do that, let me know how your month goes.
It's been a game changer for me.
I guarantee you will be profitable for a month, and you get a free Discord. So, if you think it's about money for me, I'm giving people free Discord. Show me that you're learning. I don't know anyone else that does that on the Twitter world of Discords. They want you there forever. All right, guys. Well, that's it. I'll post this. If you have it, please don't like this. If you don't have it and you want it, like it so I can get the count of people who want it. This time around, I'm not going to take PayPal for any purchases because I had some people that paid with it, and PayPal put the money on hold. They're not releasing the money. They're giving me all kinds of issues with PayPal, so I'm going to disable PayPal altogether for using for myself. Okay. All right, guys. Well, thank you. Hopefully the class was informative. You picked something new. If you have any questions, you have me catching rockets, you have Sequence, you have some mods, Jag, Cybertech. You have people that know how to use this stuff that have been, even on this call that are claiming that, they're profitable. And if you look at the trade log journals, you can honestly learn from it. The key is the patience and your risk management. It's okay to accept that you fucked up on a trade and that you're wrong. And as soon as you realize that you can accept that you're wrong, market will reward you. And as soon as you think and hope, like for instance, you got into a short here, and let's say you're hoping that Tesla is going to go to 700 for some reason, there's no reason to. This was your entry. Let's say you got in here and it started dipping. Well, you just get out here. And then here, look at this beauty. You had a bottom trend line here. This was your support. Look where it bounced. Like, it's almost like too beautiful not to play this way. Okay. All right. Well, thank you, guys. I have 2 kiddos crying, wife that's sick. So hopefully you guys were able to catch something. It was almost 3-hour class. So as we anticipated, hopefully you guys are learning, and we'll continue working on everyone to make sure you guys are successful.
Thanks,
Appreciate
Shorty.
it. Shorty.
Thank
Appreciate
you,
it.
guys.